Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on a weekly time frame where we have a 5-wave impulse, 1, 2, 3, 4, and eventually looking for a wave 5 towards the upside. Your wave 2 retraced to the 0.236 Fibonacci, taken from the low to the high of wave 1, which is a very shallow target for a wave 2. Time-wise, however, this wave 2 ended right on top of the 1-to-1 fib time, taken from the low to the high of wave 1, which is a good target for a wave 2. Wave 3 extended to the 1.618 trend-based fib extension, taken from the low to the high of 1 to the low of wave 2, which is a common target for a wave 3. The common target for a wave 4 is between the 0.236 and the 0.5 Fibonacci, and as you can see, we have hit the 0.236 taken from the low of 2 to the high of wave 3. Time-wise, however, this wave 4 is actually still a little bit on the short side, but that is not necessarily a problem. This wave 4 at least ended after the 0.382 fib time, as it ended between the 0.618 and the 1-to-1 fib time, taken from the start to the end of wave 2 to the end of wave 3. However, preferably a wave 4 is longer than a wave 2, that is at least most common, but we do have alternation in structure, which is important for a wave 2 versus a wave 4. Wave 2 being a flat structure and wave 4 being a zigzag structure on the daily time frame. After this wave 4, we are then looking for an impulse to the upside in a wave 1, 2, 3, 4, and eventually a wave 5 towards the upside. Because your wave 3 is extended, wave 5 tends to mimic wave 1 in price and in time. If we compare wave 1 and 5 in price, we can take a trend-based fib extension from the low to the high of 1 to the low of wave 4, toggle on the 1-to-1, and the price target would be 104k. Time-wise, we have then the 1-to-1 on the chart to the 1.618 for a little bit of flexibility. The fib time is taken also from the low to the high of 1 to the low of wave 4, giving you a time target between the 25th of November and the 24th of February 2025. The second and more bullish scenario on a weekly time frame is a scenario where we expect 2 more pushes towards the upside. Here we have the yellow impulsive count 1, 2, 3, 4, 5, and inside wave 3 we have the green impulse 1, 2, 3, 4, 5. Has to be said, by the way, that this wave 3 on the line chart is a little bit longer than wave 1, which is a minimum requirement for an impulse. Wave 3 cannot be the shortest wave. Now this wave 4 hit the common target area for a wave 4, the 382 to the 05 Fibonacci, taken from the low of 2 to the high of 3, and the invalidation is the 0.618 at 51k. Preferably time-wise, this wave 4 is finished. It ended between the 2 and the 3 fib time, which is perfectly fine, and the fib time is taken from the start to the end of 2 to the end of wave 3. Because wave 3 in green is not extended, it does give this wave 5 the opportunity to extend and be a much bigger structure. However, when we just look at the comparison of wave 5 against the wave 1, then time-wise the target would be between the 30th of September and the 25th of November to end this wave 5, and therefore the yellow wave 3 to start a yellow 4 and another push to the upside in the yellow wave 5. The bearish scenario on the weekly time frame, the first out of 2 bearish scenarios, is a flat structure here where we have a wave A, 3-wave ABC zigzag structure in a wave B, and look for a wave C towards the downside where the target is below the low of wave A. Wave C in the zigzag to the upside hit the 1.618. It is still a target for a wave C, but the moment the 1.618 trend-based fib extension is hit, taken from the low to the high of A to the low of B, the probabilities go up for this move to the upside to be a wave 3 compared to an ABC. We are currently ranging inside the 0.9 to 105 Fibonacci area, taken from the high to the low of A, which is a common target for a regular flat. Has to be said that a regular flat is a less common flat structure than an expanding flat, and the expanding flat has a higher target for your wave B. The second bearish scenario, which is less dramatic but bearish nonetheless, is a sideways double combo WXY. Inside wave W, we then have a flat structure. Now this wave C is very slow for a flat structure. Most commonly a wave C is a very sharp, quick, scary move to the downside, shorter than A and B, but that is not the case here. It's very extended, very long in time as well, almost ending after the 2 fib time taken from the start of A to the end of B. And if I repeat the words of Prechter himself, he says that this move to the downside is very slow and he would not count this as a wave C of a flat structure. Then we have wave X, A, B, C to the upside. Again, your wave C did hit the 1.618 trend-based fib extension, taken from the low to the high of A to the low of B, as I have shown earlier in the video. So we have to keep an impulse in mind. And then we have a wave Y. The minimum target for a wave Y is the 0.618 at 31.6k, taken from the start to the end of W to the high of your wave X. It has some nice confluence with the AB range over here, as you can see. And for a wave Y, we can have a zigzag triangle or a flat. However, if we do think about the rule of alternation, then the rule of alternation is also relevant when you think about corrective structures, and especially between a wave W and a wave Y. So preferably this wave Y becomes either a zigzag or a triangle, but a zigzag is a more common structure in a wave Y than a triangle. Going to the daily time frame, the bullish scenario on the daily time frame is a finished 3-wave corrective structure in a zigzag ABC. 1, 2, 3, 4, a 5-wave move in wave A, where I do like to show you that on a line chart, your wave 3 is actually shorter than your wave 1, as you can see over here. It did not hit the 1-to-1 trend-based fib extension taken from the start to the end of 1 to the end of wave 2. On a candlestick chart, you did hit the 1-to-1. However, hitting the 1-to-1 on the candlestick chart is not an invalidation of a leading diagonal. Then we have wave B to the upside and an impulse to the downside in a wave C. 1, 2, 3, 4 and a wave 5 to the downside, hitting the 1-to-1 in yellow, a common target for a wave C, taken from the start to the end of A to the end of B with the trend-based fib extension tool. Now what is interesting in this impulsive count towards the downside on a line chart is that your wave 4 did not hit the 0.618 Fibonacci, taken from the end of 2 to the end of wave 3. Also, this wave 4 ended between the 3 and 4 fib time. Fib time is taken from the start to the end of 2 to the end of 3, which is perfectly fine for a wave 4. In this case, we then look for impulsive continuation. 1, 2, 3, 4, 5. We're now looking for a wave 4, a corrective structure where we see some more downside. Common target for your wave 4 is the 236 to the 05 Fibonacci, taken from the low of 2 to the high of 3, giving you a target between 63.2k and 61.2k, with the invalidation being 60.3k. Time-wise, this wave 4 preferably finishes between the 1 and the 6 fib time, taken from the start to the end of 2 to the end of wave 3, giving you a time target between the 18th of July and the 28th of July. After 4, we're then counting a 5-wave impulsive move towards the upside to finish a higher degree wave 1, look for a 3-wave corrective structure in 2, and continuation to the upside. The bearish scenario is a double 1-2, the same leading diagonal in your first wave 1, corrective structure to the upside in a wave 2, and then a red 1, red 2, looking for a strong move towards the downside. This of course fits the higher degree weekly time frame bearish scenario. It is interesting that on a line chart, your wave 2 actually did not hit the 886 Fibonacci taken from the start to the end of wave 1. On the Coinbase chart, it just missed out by a few dollars, but it is still an incredibly high retracement for a wave 2, which remains very, very uncommon, as the common target for 2 is the 05 to the 786. Over here, you can see that common target area for this red wave 2, taken from the high to the end of wave 1, giving you a target between 63.4k and 67.8k, with the 886 being a target you do not want to hit at 69.3k. After this wave 2, we look for 3 down. Now, preferably this wave 2 ends between the 382 to the 1-to-1 fib time, which is taken from the start to the end of your wave 1 here, giving you a time target between the 19th of July and the 8th of August. Something that I do keep an eye on already for a while now is this volume profile, as you will know, and we have the value area low on the chart in nice confluence with this support resistance area between 60.2k and 62.5k, and then we have this point of control here, which is very interesting, sitting at 66.9k, and then the value area high at 69.9k with another resistance area here 70.8k to 73.1k, but especially this point of control at 66.9k is a level that I am keeping my eye on. If we then finally look at the probabilities, and on the weekly time frame, the bullish scenario at the moment has the highest probabilities compared to the bearish scenarios, and on the daily time frame also the bullish scenario at the moment has a higher probability compared to the bearish scenario. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.